What's happening, guys? We've got another Sunday scan coming at you for the 11th of April. I'm a little bit more rested this weekend, unlike last weekend coming from the Bahamas, but we still got that Sunday video in. Either way, things are starting to really pick up. I feel like, a couple weeks ago was, my biggest day that I've had. And then it was, it was good, but there was a lot of minimization where I'm on the right side of a trade, I cover partial, and then, it just ends up going all the way back up to my entry. So, not that it was going backwards necessarily, but it was just more of a, not even emotional swing, but just that mental, it was tiring, right? Where, I could have just locked in an hour out of the gate and been in a lot better position than, towards the end of the day, which, doing that multiple times per week, it starts to get a little bit tiring. So that said, this week, guns blazing, everything was just absolutely massive. Every single day, just coming, doing the same thing, preparing the same way. And as you guys know, I don't like low float names. I don't like to trade those because it's really just a ticking time bomb, right? Where you smash, and then all of a sudden you get on the wrong side of one. It goes into a circuit halt, maybe a second one, and all your hard work is gone, right? So for me, this type of action in the market is my favorite. And that type of action is the 30, 50, 100 million share type floats that are flipping, 50, 100, 200, 300 million shares per day. Some of the, the ability to scale into these trades in size, to a level that you typically wouldn't, is rare. And, it's a day or two that surrounds the move that you can take advantage of that. And then you need to kind of move on. And the thing about this market is it's very easy to move on because the next day there's two new ones. The next day there's two new ones. The next day there's two new ones. So you always have these trades surrounding, the moves for those 2 or 3 days before, hands off and, wait for the next. So hopefully that continues. I don't see it going away. There was already a bunch more that set up on Friday for the week ahead. There's definitely no shortage of money or chasers or FOMO in the market right now. Market obviously pulled back the last couple days as on a macro level. But small caps, really all you need is that 100, 200 million share trader each and every single day, and it makes for a great week by week's end. Getting right into it. Wore my Icon Meals shirt. As you guys know, that is the food I eat every single day. When I went to Bahamas, I met up with Todd, which is the CEO of it, and he's the one that gives me a box to give away each month. So that is this week, and that is Dan Spar. As long as you're in the U.S. If not, then I'll pick another winner next week. But we'll ship you out a box of foods. Email me, webmaster@investorsunderground.com. The T-shirts, S. Kazwani and Scott Fisher. You guys got the IU T-shirts for this week. Once again, it's just a thank you for leaving your key takeaway in the comments section on YouTube. So I appreciate you guys doing that, taking the time. It helps me, help you, helps us create more micro content. And in the end, hopefully you're helping another trader once we turn that clip into a smaller video later on in the week. Now, video topics. Overall sentiment. Pre-market versus full day kind of bias. I think that's very important. You got to let things do what they want to do pre-market. It's okay if you get in there, and it's okay if you make a trade, a pre-market trade. I talk about this a lot. Kind of separating the 7 to 8 a.m. or 7 to 8, 8:30, whatever type trade versus the open. You don't want to have too aggressive of a bias going into the open. You're on the wrong side or you have too much, and then you don't really get to see things clearly. You want to be really cautious about getting the bias in this market because things are lasting a lot longer than you would expect. Things are going higher than you would expect. But in the end, you're probably going to be right. It just doesn't matter because you might not be able to make it through. right? And it's kind of reckless to try to make it through. So I think we had some really good timing on the discussion last week. I talked about Lance's Twitter post that I had mentioned, and talking about kind of that V, whether it's a long or a short, it doesn't matter. But understanding that two prices, even though they're the same, they carry different risk depending on what side of that V you're on. And so if you don't know what I'm talking about, go back and watch the beginning of last week's video. I think it was helpful. It was good timing for a lot of the action that we had this week. Don't force a trade bias. SPFM. Absolutely had a great read on it. And I thought it was going to be like the next LGVN. And LGVN, you guys know, went nuts. It basically went, 5 to 12. And then it had another secondary move. But for the most part, that initial move is what I wanted out of this SPFM. And absolutely nailed the call. Absolutely missed the trade. I was looking for a little bit lower to get involved, buy the dip. It basically held 7. I was looking for a flush, maybe 680, 650s. Kind of trap and then go. I didn't get my entry. And so I didn't feel comfortable chasing it. And, if I had chased it, it would have worked. But you know what? If it didn't work, I would have beat myself up a little bit because, I knew not to chase. I was waiting for my entry. It didn't come to my entry. There's no reason for me to be involved. And so I think that, it's okay that I missed the trade, and it is what it is. I knew not to short it. I knew not to, step in front of it, be stubborn, all of those things. And usually that does turn into a potential long bias. Saw the tape, saw the trap, saw everything. But it just it didn't come to my comfort level. So rather than chase it and do something dumb, I just avoided it. I just avoided the trade. And unfortunately, it would have been nice. I look back and what could have happened? They ended up raising in the morning. Or they ended up doing the filing for the prior S3, registering the warrants, whatever. Would I have been long? Would I have been in my mind thinking this is the next LGVN and overhold it and end up in the same position anyway? Maybe. So I always try to, look at both sides and, would I have maybe overstayed? So maybe it would have been up a lot, came right back down, would have been upset that I overheld. So whatever. It is what it is. I did go long on SPFM on the flush as soon as that raise came around 750 to 770 range, 755 to 770s. And, I did have a bias of maybe they're gonna swipe this back 8 to 9. And I saw the tape at 780s and they were selling it. It was obvious. I even mentioned in the room, you have to assume that 780s is going to be the top. And because I hadn't really sized up yet, I was like, I'm just going to ignore that. I'll wait and see if it gets over it. I should have used that as an exit. I ended up having to bail 720s, 680s. But I didn't force, the trade to have to work. And the best thing that I did was I was wrong and moved on because ended up going a lot lower. Now, it had a good rebound. It had a good opportunity, but I also missed that too. It's okay because the way that I look at it, all of those things that had happened, had I been really focused on those, I probably would have missed something like IMTE and that BWV. And for those of you guys that didn't pay attention this week, those liquidation plays are back. A lot of the times it was there was Chinese companies that were listed, recent IPOs, and then there's just one day, 3 to 6 months after IPO, they just absolutely get demolished. This time they were US-based companies, but you never know, who's behind them. Same concept, groups pushing these names. You see the volume and then it just absolutely comes apart. So the way that I look at it is if I was really too focused on something like SPFM, then maybe I would have missed those home runs. And as you guys saw, if you were in the room, I mentioned I was treating IMTE just like the liquidation plays. We actually got to bounce back up to the low 20s. I think it was 21 range or so before it ended up unwinding, and it was a nice full day unwind, just like the old days. And it was a really home run trade. So BWV as well. I participated it later in the day and on Friday, but unfortunately, I didn't have a borrow when it was time. So it is what it is with that one. The last point I was going to make is let everybody else pay, right? We talk about that a lot. And SST was a great example of that. Now, SST was one that just was a thin micro type float, a high redemption style SPAC trade, and then they squeezed it up. And I let it kind of put in the top. I put in a couple, nibbles here and there just to kind of get a feel, get in the zone, and see where it's going to peak out. As soon as that exhaustion candle came down, came back up, and it failed. It confirmed. And at that point, that's when I said I was getting short. And obviously you saw that with the trade that I scaled as it continued to fail. Absolute nice unwind, but a great example of just being patient, letting the tide turn, stop trying to be a hero, trying to find the top. And you also saw that on SGLY, which I will definitely go over right before scan on the next section. But price alerts, set price alerts. It's free to do that. You're going to forget every name that you wanted to trade, right? You're going to look back and say, I should have done that. I could have done that. That was the one I was looking for, right? At the week's end, you look back and look at how much you missed. Just set a price alert. It's going to tell you when it's time. It's not going to forget. You are. So that's the best piece of advice that I can give to not missing these layup trades. One other point I wanted to talk about was, I guess it's more of like a subliminal kind of entry and exit. You don't really realize that you see it, but the importance of screen time, right? Tilray this week. Tilray, I knew key levels 790 to 820s, right? So we had a morning move one day. I think it was Tuesday. Monday or Tuesday. I think it might have been Monday, actually. Ramped up to 818, 815, something like that. Once it came in, 810, tried again, it failed. I was comfortable and confident scaling into that trade and then scaling in more when 790 broke because I knew from trading it the prior week that those were the key levels and that was where the resistance was. Doesn't mean that it has to stop there. But there is a good chance that it's going to have, some inventory there. It's going to have an issue. And if it breaks through it, that's fine. You can always stop out for relatively flat or, right around that level. But it was worth the risk. And it went right to that prior level and unwound. And it's such a key part of trading this year, without a doubt. And you saw that for sure, MDVL and MNTS this week, which I will go over right before scan. To the T, levels, lines, exhausted, failed follow through, and worked like a charm. So, apply it next week to your trading. Let me know in the comment section how it helps you. But if you don't see it, draw it. Draw it on those charts. And it'll remind you, hey, I'm getting a little bit too much size on the front side. Or, hey, it just broke down under that key level. Let's see if it confirms. And then, you can be potentially a little bit more aggressive and confident with the decision because you've got the data to support it. So that's it for the first part of scan. Let's get right into the second, the watches for the week ahead. All right, guys, so for the second part of scan, as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're okay with that, you want to learn kind of how I prepare for the week ahead and what decisions I would make based off certain price action, you're in the right spot. But like I said, the first two things I wanted to go over, MDVL, looking left, gathering information, knowing about what levels are going to create some sort of stir, right? And so these are not after the fact levels. These are levels that I actually posted in the room, spots to be aware of, and key levels to see exhaust. Now, the biggest thing to understand is that you just have to keep paying attention to each level as it goes up. It doesn't mean you're adding and you're adding and you're adding. That's the wrong way to do that. That's a great way to blow up. But you have to see what levels are going to matter so that on the way back down, as they exhaust out, you can use the information from earlier to apply it to your trade and have a little bit more confidence and conviction with the trade. So for example, the first piece of action that we saw was this 220 level. And the 220 level was sort of it blew through it, started to absorb, blew it through it, started to absorb. So right away, I knew that, if I started into it, number one, I'm not bearish, and I even wrote that in the room. I have to get in the trades a lot of times just to get a little bit of a piece, get a feel for it, and then get a really good read. So if I put on a little dabble, just like I said in the room, I think that my quote was, putting on a dabble, just because I'm in here does not mean that I'm bearish. I want to identify, get a good read for this thing, but we need to see 220s exhaust out. And if it doesn't, then obviously we're going to head higher. So that's exactly what happened. And what happened was actually that 220 busted, right? On the first test back through, it ripped right through it. And so what happens is a lot of people get aggressive on this line right here, where it cracks that key level and they make a really bad decision. They go from having a good entry, say 230s, and then it snaps down to 215, 210, and they slam in, right? Because, all right, it cracked, it's going. No, that just ends up being a trap. Until you actually see it exhaust back out at that 220 level, you don't really know if it's going to be a trap or a stuff. And in this case, obviously you saw it. It was a flush under VWAP, comes back, first test of 220, right through it. So there's zero confirmation. So then the next level where it starts to kind of hang out is 235. And then you can see it starts to consolidate for a couple minutes. And then 250s. So you can start to see 250s. And a lot of times, maybe it doesn't look as clean as, say, 220 does. But you start to identify this by watching the tape. And you start to see a lot of battle at 250s. There's a lot of volume going off. So then, as it comes back and it fails, comes back, tests that 235 from before, comes back, confirms again. But we have yet to confirm the 235s. Comes back again. Each time that it continues to peak out, obviously it's getting heavier and heavier. But until you actually get a breakdown and comes back and confirms, you don't necessarily have that real, unwind potential until it finally decides to give way. And the final sentiment shift level, if you guys remember, was the 220 level. This was a picture perfect opportunity. It worked to a T. All of the levels gave you the conviction. The only thing that I did wrong is I took off midday. So I took half off, which, minimized the opportunity, but I'd rather be safe, and I don't want to be checking my phone every second when I'm away from the desk. It's one thing to, take some time off and get away from the desk. It's another thing to be, glued to your phone when you're off the desk. So that ended up being a fantastic trade. It worked to a T. I ended up holding some over on the short side, but I am hopeful that we actually come back up to, this level. I'll just draw another line, but basically come back up to the 210 level, exhaust out through there, and then give another opportunity for the unwind. But very clear, very clean, failed follow through, using the levels that you identified on the way up to really give you the conviction on the way down. And the same deal on MNTS, it also keeps you out of trouble, right? So MNTS, there was a lot of traders in this and had a great read in the room. On the first day, this was going nuts and had a nice walk down from, pre-market into the open. 380s absorbed. And then we started to identify the key levels. You can see where it starts to exhaust, soak, exhaust, soak. And as you guys know, every time that something kind of stuffs, that used to be like the end, right? Where it stopped and trades over, unwinds the rest of the day. Nowadays, sometimes that stuff could just be a huge short getting in there, but the longs aren't done with it and they still soak. And now you know that that stuff was actually a trap. So until you see things confirm a few times and break under key levels, you can't assume that it's going to break down. Otherwise, you're going to end up in trouble. So you started to identify the 450 level, and it ended up working out perfect. But you want to assume that the other key levels, 408, which was the level given in the room, are going to hold. So in the room, right over here, I said, just in case you're trading this thing, I'm sizing down. I'm getting out because it's very, very thin. And especially if you have any size, you start to get that feel when you're trying to size and you get a partial and it bids up over you. And you put it a little higher, you get a partial and it bids up over you. And to the point where you start to have to kind of chase the exits, or at least be a little bit more aggressive, willing to pay a little bit more. And when there's a lot of competition on the bid side, you have to have your antenna go up a little bit and understand, like, hey, this is trading 150 million shares, but it's actually pretty thin. I'm not getting the covers that I should be getting given the volume. And that should kind of alert you to be a little bit more aggressive with covers. And that's why I warned the room. And, the goal for me was to be done with it and ideally get a weak open the next day for the breakout. And we had a nice move, but ended up pulling back. To me, I still like it as a potential long versus those 380s, but, I'm nothing aggressive. I want to see it prove, and it might need Monday, Tuesday, Wednesday to kind of prove that. For now, I have a position that I started into, but nothing that I am super excited about until we start breaking back over those prior key levels. So we'll see what happens. But as you can see, using those levels from the prior run, 450 was the top on Friday. So if you were day trading it, that's a great spot to assume that it's going to hold. But those are the two main ones that you can use for key levels. And like I said on Tilray, this ended up being a perfect one from the prior run. And I don't know how many days back. Let's see. Yeah, here we go. So, the level that I gave was 820. Whoops. Key was stuck. 820. And the other level was 790. So you can see where the exhaustion levels, exhaustion, where it starts to peak out, and then where it also is sort of like a magnet. And that's what I was able to utilize on this day, as a, hey, this is a pretty good risk to reward type of situation, because it's probably, if it's going to head higher, it's probably going to need to consolidate at that prior top for a little bit before it heads higher. It's going to work out all those sellers. So that's why I take trades like that. So let's get right into next week. We got Twitter. Always, it's been a fantastic trader this week. Lots of volume, lots of action. You can actually trade it both ways so far. Literally every single day this week. And unfortunately, I only got a small piece of, both ways. One day I traded it both to the upside and the downside. I participated in it small this day. I ended up having to chase it down a little bit. Got a good piece, but not sized up like I would have liked to be. Ben, rather. And then again over here. But you can see, looking left, using, levels. It doesn't have to be exact, but you can see how it tends to go to the same levels. Even the support lines tends to go to the same levels. Draw lines. It will help you, I promise. MDVL. By the way, for Twitter, reactive trade-off open, 9:45, 10 a.m. type trend join. MDVL for Monday, higher the better. I am just hopeful that we do have some power to 220. I think it's likely that it gaps down, but we'll see. But I do think that there should be a nice gap fill back down towards 150s. But I am just really, really hopeful that this weekend everybody's super, super bullish and we get a push towards 220s out of the gate before it starts to come back towards this 150. PHIO, this was kind of a, what kind of market are we in, right? And we've got MDVL going. We have all these other trades going like nuts. So people get comfortable holding these bigger floats and these bigger names. Shorts come in and then they get squeezed out midday and into the after hours. And then it's possible that, they pretty much walked. So I would expect a gap down on this. I am hopeful that it opens 220, 240s, gives an opportunity. But I do think that we could be looking at 20, 30% pullback on Monday alone. Ideally, we get a good opportunity off the open, but we'll see what happens. So 120 million shares or so. Great example of what I was talking about. You've got that daily 50 to 100, 200 million share trader that you don't need to jump in front of, but just, take a piece of it and be patient and let that trade come to you. Next is the failed follow-through section. For those of you guys that have been reading scans, MULN. I had been fading it since the low threes, 310, 320. Same thing with HYMC. My goal was to cover all into any flushes on Friday, anticipating that either one, Mullen would have some sort of rebuttal, or both would have some sort of PR update or something by Monday. Typically Mondays are good for these kind of meme type names. And for me, it was straight down. And you guys know that, any tweet, anything, any rebuttal in this case, like Mullen had a little video on Friday, we'll launch it back up. So I am hopeful that it pops, it gaps up, and we should have another opportunity here soon. Once the volume fades off, once the rest of the shorts, kind of get out of this round, it's going to start to die off on the volume side of things, and we should have a really nice, steady fail throughout the next couple weeks, in my opinion. ATER, fantastic. You guys that have been paying attention to Sunday video know that was a long trade for me. It was a swing trade. I got a good piece of this move, and I got great exits. I felt really good about it, and then caps up like crazy and goes to 5. No participation there except a short trade on Friday. Unfortunately, it definitely would have been nice. But between this one and BFRI, same kind of concepts. Higher the better. Look left, draw lines at the peaks, right? Where, it's having trouble intraday over here. So 460s would be kind of a key. You've got all this baseline over here. So 450s. I said 460s, but I meant 480s. 450s, 480s. That would be ideal. Pops, exhaust into those levels, starts to fade off. So watch those levels. Same deal, ATER. It's not a hard concept to, just kind of draw lines. You can draw lines where, the base has been 435s. And you can see that, we've had some, pretty much consolidation 460s to 470s. It's kind of exhaust out over that level each time. So for me to be patient with this thing, I'd want to see 435 kind of be the ceiling. Fail, starts to fade off. Otherwise, if it's over that, I want to assume that 435s is going to kind of base. SST, fantastic. You can kind of see, this exhaustion, kind of setup over here. And the idea is not, you don't need to nail the top, but you need to kind of get an idea of, okay, what's the channel? Where is it hanging around? What's it doing? Where is it exhausting people? Where is it soaking? And as it exhausts out and through those levels, the volume comes with it, and it starts to peak out and fail at those key, points. And if you actually see after this exhaustion move, we can zoom in a little bit. You can see it actually comes back, fails, and then fades off. That's plenty of time to gather conviction and scale up into that trade. And if you're wrong, then, obviously you'd probably want to size down, if not just if 3180s hits, but if 3180 starts to kind of base, 32, 3180s, 32, 3180s, 3220s, you probably don't want to fight it with size. But you can see, the exhaustion move, fail on volume, and these type of candles where it ramps up, sits back, that's what you want to see. And that's why you saw me enter where I did in the room on Friday. Fantastic opportunity. BRCC. This is another one of those where, don't try to be a hero. Let it do its thing. You're going to find a $3, $4, $5 pullback type trade on this name. But If you try to be a hero, you're going to lose 2, 5, 6, 8, on the way up. So we already had this kind of reset day, relocked in shorts. So in my opinion, we're just kind of working out the shorts from this day, the no-brainer shorts from this day, the ones that got locked this day. And now, this, in my mind, everything over this 28, 25 level, or even the prior wicks, around 29, that's all squeeze. So let it do its thing. We're either going to have a blow-off day, or I would be reinterested 28, 29, 20. I'd set an alert for 28.50, 28.20, 28, so that when it's coming back down. If it starts to peak at 28.25, that's my sign that things are starting to shift. If it starts to reclaim it, obviously you move on. Another example of why you set price alerts. SGLY. We've been monitoring this one on the scan for probably 3 or 4 days now, maybe Monday or Tuesday, I forget. And then we had the failed follow through setup. Right over here, fades under VWAP and tries to retest, fails, and unwinds. Got a good piece of it, minimized it though because I took half the day off again. But participated in the 1850s, the 18s. You guys saw that trade. It's just about setting the alert. You're going to forget. You're going to see this perfect setup, and you're going to forget about it. You're going to look back. You're going to see this candle and say, I knew it. That's why you want to set price alerts, so that you don't miss these. That's why you want to set a price alert on BRCC at 28, 25, and 28, and a little bit higher maybe. You don't have to watch it go to 30, 31, 32, but don't forget it when it comes back down. Last couple on the unwinds. IMTE. This was awesome. You guys know that I don't care about any of these low floaters until we see the volume, until we see the exit. So you could see the block came in, and then that was that. And complete unwind, fantastic opportunity. We got so lucky that we had these rebounds right over here, back up to 21. So I was able to add in some more and faded it all throughout the day because identified it as one of the liquidation plays. And obviously, BWV was the same deal. So again, it was I had an opportunity to do it over 59, but I didn't have it. The borrow is what it is. But you can see steady fail throughout that day, and then you can just kind of look left and look at these levels and see that it had trouble throughout. So I traded the pops on Friday as planned on the broadcast in the room. Continuation section. You guys that watched the video last week know that I was long TCAT, thinking that we were going to potentially get a nice sector move. Nice action. I sold a bunch into the blow-offs. I've been reaccumulating into the flushes and holding a core. I actually like that. See these candles every single day. It sold off huge, sold off huge. To me, if you were long, you're probably gone. And then it actually got saved on Friday. So I actually like the way that it got saved after these very bearish candles showing significant selling pressure. Lower high, lower high, lower high, lower high, right? And then all of a sudden, here we are. We're back up towards the highs of the move, almost. Not necessarily the whole move, but I have a bigger picture view here. But again, just like a ARTW, you can have a big move, but if you don't lock any in, just like we talked about, don't chase these moves, and make sure if you do have a move from the fours, the high fours to the high sevens, make sure you're locking in, because they're not all going to go. And this thing came all the way back to where it broke out. This was the breakout formation that I liked. Then it went nuts. And, unfortunately, I was up a lot more than I was. But if you did not lock any in, then, you got a back. So, same deal with TCAT. I may like it, but I've been working around a core. And if it fails, you have to respect the trend. You can't just, sit there and stay in there just because you think it's going to go higher. Have a plan, stick to it. Don't overstay on these things. Plag, PLAG, I'm just going to keep an eye on it. I see the volume. This thing used to be a pretty massive runner back in the day, and it hasn't done anything since. So what I liked about it is this morning move, soak some of the float, comes back. So I have an eye on it. Nothing I would chase, but I'm going to watch to see if this starts to build. LYRA. No position, but I'm going to see if this has a second day move. And last but not least, MNTS, like I said earlier. I want to see if this ends up being a trend change. You want to assume that it's going to have trouble with this, but we've got enough volume that if it starts to base over 430s and breaks out over 450s, we could go 5-6. Like I said, I have a position on it. I don't love it yet, but I want to see it prove. And if it stays heavy, 430s and 410s, then I'd be looking for potential failed follow through. So, I'm not going to just stay long bias. If it starts to break down, I have no problem participating in that breakdown. So that is it from me. Hopefully you guys have a good rest of the weekend. We've got a lot of action happening right now. And for me, if it's not doing what I think, I'm moving on. There's no reason to hold things longer than, you should be. Right away, is this doing what I expected or not? And if it's not doing what you expected, then why are you still in? We had a lot of great conversations in the lounge this week. Sometimes traders going through a little bit of pullbacks, and they start trading to get back. They start changing what got them to where they are. And what I told them is, you want to look back, right? If your trend is up over the last year, 2 years, if you're a good trader, consistent trader, then trust that process, right? Go back to doing what you did. When you are trading your best, when I'm trading my best, I'm locking in when I plan to lock in. And I'm moving on when things are not working. But when I'm trading my worst, I might have this perfect trade and I'm up a lot, but it's not enough. And normally I'd be locking in, I see the exit, but I think that's going to fix everything. And with the conversation in the lounge, that's what some of the people were doing, is they think that this trade that they're up on is the end all be all. It's going to take care of them. They're going to be, saved. And then they give it all the way back. And then they go back to break even, but because they were just up, break even's not good enough, so they stay and then they turn it into a loss. It's all about chipping away, having realistic expectations. Think about 3 months, 6 months out, start chipping away. And before you know it, you're back in action faster than you thought. So stay firing all cylinders as long as you can. Keep the drawdowns away. That's the secret. Keeping your money in your account. See you guys on Monday.